Hello and welcome to our first intraday trading strategy video. For the first one here, what we'll focus on is trading the news, and we'll look at how you can take positions in the market on the back of news events to try and look for quick profits as the market doesn't immediately price in the information you've received from the news. Now, you can take positions ahead of these events, but it's quite risky. And it's always more prudent, I believe, if you wait until the news event actually comes out and then look to act on the back of it. So first off, if you are looking to trade on news, it's important to be well prepared. So if you go on the XStation platform here and you go on the calendar tab, you can see the news events and the economic releases that are out that day. Today, Tuesday, 7th August 2018, is fairly quiet. So if we go back to last week, you can maybe see a bit better example from Friday, the 3rd of August. Here, for instance, at 9:30, we had UK Services PMI. You can see it's indicated red here, which means potentially high impact. And the figures themselves, we have a forecast, so this is what is a consensus expectation. We also have the previous value, and then the published value once it's out. Obviously, if you're looking ahead of time, you won't see this published value. Now, the published value relative to both the forecast and the previous can be important. If anything, I normally put a little bit more importance on the forecast and the consensus expectation rather than the previous print. So now looking at some charts, we can see how this impacts the actual markets. This is a 1 minute candlestick chart of US dollar CAD taken from last month, from the 20th of July. So you can see at 1:30 we had some better than expected Canadian retail sales data, and what this caused was a sharp move higher in the Canadian dollar. Remember, US dollar CAD falling is a sign of Canadian dollar appreciating or US dollar depreciating. Okay, so in the first minute of trade here, we had a 52 pip drop on this stronger than expected data, but if you are looking to trade off the news, you can obviously get in much quicker than a minute. The execution speeds we offer are in the milliseconds, so you can get into the market very quickly on the back of this. You'd hope to be able to get in quicker before you've seen the whole 52 pip drop in that first minute candle. But also what's worth remembering here, and like I say, how it can take markets a while to price in these events. You can see in the minutes that followed, the market continued lower. We actually had a 68 pip drop from the close of this 1 minute candle down to the low, which we saw around an hour and a half later. Now, it's obviously not an exact science, but what it shows you is that the market can't instantly perfectly price in the information that's being released, and sometimes you have a prolonged effect from a data release. A more recent example we had in the pound US dollar, so the Bank of England rate decision, which we had just last Thursday. They hiked, which was widely expected, and we got an immediate jump to the upside. You can see we raised around 45, 46 pips in the minute afterwards, but then the market consolidated. If you are trading around central bank decisions, these can be some of the best news events to trade off. So we have the Bank of England, also the ECB and the Fed. They're all pretty major, or potentially major anyway. But one thing you need to look out for is not only do you have the rate decision and a statement, but you also have a press conference normally with the governor or the president around half an hour later. Here you can see, which isn't too untypical of a normal price action, we had the initial reaction, but then the market calmed down and awaited Governor Carney's press conference. You can see the market tried to push higher again as Carney began his talk, but as he sounded maybe not as hawkish as the market had hoped, you could see the price turned and dropped back lower. Now, in terms of trading this, you could obviously try and buy straight away on the hike, or you could wait for the Carney press conference. Now, whilst you can trade directly off the news, I think it's also important to keep an eye on previous reference points in the market. So once Carney begins speaking here, the two levels I'll be looking to in particular would be the high at 131.26 and where the market was before the hike was announced. You can see once we make this large move to the downside and drop back below 130.80, the entire gains have been erased, and this is seen as potentially quite negative for the market. Now, if you were to enter in a short position here, you could manage your risk. It's always important to be prudent with your risk, I believe, in trading. So you could have a stop loss above this candle which dropped lower, or possibly the swing high, or if you want to give it a lot more room, even above the high here. You can see the market then dropped around 75 pips in around 15-20 minutes, making the low around 1 o'clock, around 1:30.15. Again, don't expect to catch this perfectly and get the whole size of the move, but if you do see this reverse on this negative price action, then it is sometimes seen as quite a clear indication that the market could be set to go lower. More recently, just last night, we had the Reserve Bank of Australia rate decision where they left their rates unchanged. But what I want to show from this chart is a slightly longer term approach. We've now looked to a 15-minute chart, And what I want to show here is if you can set up your charts beforehand with certain levels, you can look to trade off those levels, and you just use the event itself as a possible catalyst. You don't trade immediately on the event, but you trade on either buying support or looking for a break through the support, in this case to take a short position. You can see we had previous lows here around 156.18, 156.15. Now this RBA rate decision, which was seen as positive for the Aussie dollar, negative for the Euro Aussie dollar, and the market drifted lower. Here isn't a great place to go short because you're going short close to price support, but once you see the breakdown below here and crucially also a close below here, then that is a potential short opportunity. You can have a stop loss above the candle using last candle rule and then look to run the market down lower. Again, in terms of take profit targets, you can use just multiples of this. You could say if I'm risking, let's say here 15, 20 pips, I'm going to look for 30 or 40 pips or something like that. And you can also then look to get out and you take advantage of the move from the news. You're not looking to hold this overnight or hold it long term, you're just looking to be in and out and try and bank a fairly quick profit. Finally, this can also work for stocks. This is the US 100, so this is based on the NASDAQ 100. And you can see recently we have Facebook reporting. After Facebook reported their latest release, it was taken very negative with the market. You can see we have this huge downside on a M5 candle, so 5-minute lead drop of around 50 ticks. The market came back higher, but what's important to remember is also if you are trading stocks, they do close out of hours, and our indices do close for an hour between 10 o'clock here and 11 o'clock when it reopened. So during this time there was a conference call at Facebook, there was some negative guidance essentially from the board members, and we saw a large move lower afterwards. So again, you can look to trade stock earnings through indices, not through the stocks themselves, because the stocks stop trading at around 9 o'clock. Okay, so that's the first strategy. Please tune in for the second one where I'll be running through how you can use different time frames to analyse the markets.